Hello, Maverick traders. Welcome out to your market roundup for August 26th. Corey here with you. We're going to take a look at meaningful news in the markets. We're going to look at sector rotations. And then, as always, we're going to highlight our very best ideas. We've got some bulls, we've got some bears, we've got some good things to cover.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so as we look at the markets here, not too much going on in equities. I mean, NASDAQ was definitely the laggard, down almost 1%, but kind of a quiet day across the board. Dow, S&P, Russell were all flat. Now, the oil markets jumped sharply higher, and that was part of the daily news. Crude oil jumped by more than 3% on Libya's production halt. Usually, these things are somewhat of a temporary knee-jerk reaction. I'm not so sure that that's going to be a major market mover because, again, even if Libya shuts down some production, there's other places that can increase production and fill that gap. So a little bit of a reaction, but I wouldn't expect anything too significant there in terms of not having enough oil or something like that down the line. The Dow hits new all-time highs. S&P is just within a whisper of new all-time highs. The NASDAQ is lagging behind and still has a few percent to go. Advanced decline line, 56% of stocks down, 42% up on the day, and the 50-period moving average firmly on the bullish side with 70% of stocks upward trending. Now, if we take a look at the S&P chart, you can see how we're within that whisper, like I said, of new all-time highs. Well, this has been a very, very strong rally to get back up towards that resistance zone. Normally what happens when you come back to a key level like this is that you'll respond to it, but the market's kind of wacky in the way that it does it. I'd expect it to either stop just short of or pierce through and then fade off. And the reason it does that is really to just kind of confound and frustrate the masses, I think. If it pushes through a little bit, it'll trigger some stop losses up there. If it stops just shy, it will not allow people to sell perfectly at that prior resistance. So I'm kind of guessing just based on today's price action, maybe we'll stop a little bit shy. Now, a lot of people will look at that and they'll say, oh, this is going to be a double top. We start to fall off and they'll go, oh, we failed at resistance, we're going to go down, and they get all these negative thoughts and expectations. And really what most of the time happens is not a double top, right? You could do a double top here. Looks like an M pattern and break this level and so forth, but that's not the norm. What normally happens here is you come back up to this resistance, which is what we've done, and instead you get a minor pullback and it turns into a cup and handle type of pattern. Here's the cup, and if you measure it out, the handle would push us down to about 5,500 or so, but then up and away from there. So I never expect a double top or a double bottom. Instead, I expect this will turn into a cup and handle. And if this level doesn't hold and we start to break down here and we go beyond that normal, remember a handle is about 30% of the size of the cup. If we start to break below that, well then I know that the market's weaker than it should be. Then I know the market's got trouble and so forth. But I would be looking to buy the dip around that 5,500 mark because according to cup and handle, and that type of pattern plays out a whole lot more than a double top, that would be a great buying area. If you look at the NASDAQ, if the S&P pulls back in that cup and handle type of pattern, the NASDAQ maybe pulls back and fills in this gap, gets a little lower here for a few days, nothing too dramatic, and then they will most likely try to buy that dip and see if we can run it higher. Can the NASDAQ get back to its highs? Clearly quite a bit of lagging performance. So Tech is not at the forefront of what I want to be aggressive in right here, right now, but we'll see. Again, I would anticipate a cup and handle and then adjust if that handle area at 5,500 doesn't hold on a pullback. As we look at the price action, Nvidia reports earnings on Wednesday, which is one that's going to grab a lot of attention. They were selling that off today. Ahead of that news, Tesla also down quite sharply, and just semiconductors down in general. That whole space was pretty negative. No big surprise, energy was trading nicely higher on the back of oil being up 3%. And I had made note last week that energy stocks held up pretty well, even with oil selling off last week, which is a little bit of a market tell. That energy sector hanging in a little bit better than the commodity. And sure enough, on a good day for the commodity, the stocks perform well to the upside. So as we look at the markets, we're still in this upward phase. You've got to be careful in managing your expectations and your feelings and so forth through the market. People need to be very aware if they have a tendency to be perma bulls or perma bears. I find more people are permanently bearish and they think the market should be collapsing and they should do this and they should do that, and they just try to constantly bet on catastrophe in essence. Every little downturn, they panic because they think this is the big collapse, and it just really creates a lot of problems. So understand where you're vulnerable, where your sentiment and your kind of extreme views are, and try to rein those in and just simply trade the market in front of you. So let's look at some bulls, let's look at some bears together. We've got a list of a few on both sides. I'm going to start on the upside. And here's a good example of the dam breaking, right? So you've hit this resistance, you've hit it, you hit it again. And what happened recently, which is kind of nice, is as you hit it here, you just consolidated underneath. And sure enough, the dam seems to have broken. We are breaking out to the upside. How high can it go? I don't know, but it should go higher. Will there be some choppiness mixed in? Sure, but it should go higher. I would anticipate a move into the 70s is coming for the stock in the near future. As we look at Roblox, similarly, the dam has broken. And what do you notice about both these stocks? They're making new highs ahead of their sector, ahead of the broader markets. We've got some real relative strength. They broke out on volume. How high do we go? I don't know, but it should go higher. Now, in the case of Roblox, you may get a little kiss goodbye. It could come back to the breakout zone, just pull back for a couple of days, and then give you that little kiss goodbye. Old ceiling becomes new floor type of idea. That would be ideal. Nevertheless, I would be looking to buy Roblox on pullbacks. Airbnb, the opposite dynamic. We basically have broken to the downside. Now we're in a little bit of a consolidation mode, and I wouldn't get too aggressive with this, but I would expect that we're going to just temporarily pierce below that low. So it kind of sets up well for just a mild downward expectation. As we push below this low down here, that may kind of bottom it out. We had a little bit of a sign of exhaustion here, and usually there will be a little bit more follow through, and then maybe the stabilization, the bottoming out process can take hold. But for now, probably a move just below the 110 level is what I'd be targeting in the short term. Phillips 66, here you're in the energy sector, which is pretty strong, but this stock lagging, little bit of a descending triangle type of pattern. You can see the little pullback up underneath the downward sloping moving averages. And if it rolls over, I like this for a bearish trade and a trade that should push below that 130 level. So we've got some ideas on both the bull and bear list. In the case of this particular stock, I'd like to see it roll over. I'd like to see that pivot before I jumped on. So markets are going to be watching Nvidia earnings on Wednesday. We've got core PCE, which is a Fed inflation target, comes out on Friday, and still plenty of earnings. We've got Salesforce, CrowdStrike. The last time CrowdStrike was in the news for some major problems and internet issues going down, and it affected airlines and so on. So this is them reporting on what effects that has on their earnings and such. Dell, Nvidia, Lululemon, and others reporting earnings this week. Hope you enjoyed the market roundup. Have a great week, everyone. We'll see you next time.